Hello everyone. This is the pre-market report video for today 10th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's discuss what Fed chairman delivered in his keynote speech at IMF annual research conference in detail. Basically, he said he's aware of the 10-year bond yield increase situation, but he's worried and not confident that monetary policy was tightened sufficient enough to bring the inflation back below to Fed's 2% target. Last week market becomes super bullish because in the interest rate decision press conference, he said he thinks the monetary policy was restrictive enough and for now he don't want to increase the interest rate further. But based on totality of incoming data, he will decide on that spot. As we know, after his speech, 10-year bond yield crashed from 5% to 4.5% on last Wednesday and S&P 500 increased over 6%. But now he is saying we might see some more new interest rate hikes, which is not the news people or investors want to hear. Here, just saying, I have been following him for some time. If market is bullish, always he will come and deliver a hawkish speech. And if market is bearish, then he will deliver a dovish speech. That's his usual. Last week, 10-year bond yield was high and market was in bearish mode, so he delivered a dovish speech. Now, in 1 week, global momentum turned positive, so he changed his stance. Because of this Fed chairman's comment, in the Fed monitoring tool, over 60% probability chance that Fed will cut the interest rate in the May month, that now dropped to only 46%. In question and answers, investors did ask why Fed chairman was changing his stance in 1 week. For that, he pointed out that even though inflation has dropped a bit, it's still way higher than their 2% goal. And he used a funny term, head fakes, to describe how inflation seemed to be going down but not consistent enough. So in a nutshell, he was cautious but also letting the investors know that they will do whatever it takes to get the inflation back to below 2%, even if it means we are in for more interest rate hikes. After hearing all this, the stock market dropped significantly and even government bond yields also increased. In the end, Dow Jones down by 0.65%, S&P 500 dropped 0.81% and Nasdaq decreased 0.94%. In case of US VIX, from below 14.5, it increased near 6% and moved to 15.3. Then regarding 10-year bond yield, on Wednesday it was around 4.51%. Now that again increased and moved to 4.63%. Coming to oil, it was same. At the time of this video, Brent crude is trading around $80 per barrel and WTI crude is trading at $75.5 per barrel. In case of Indian ADR, only ICICI Bank closed positive. Other than that, all other three closed negative in line with the Indian market, or we can say more negative than Indian market. Just for info, always in IT stocks, there will be a 1 to 2% negative difference in ADR with respect to the Indian spot market. It's to compensate for the rupee dollar conversion. But last night, ADR went on the positive side despite both IT stocks closed 1.5% negative. So this kind of explains two scenarios. One, market expects rupee will appreciate in future, which I doubted, but it is what it is. In those cases, IT stocks today might fall just to 0.5% or even trade positive. Then the second scenario, IT stocks might crash more than 1%. In that case, no rupee appreciation. About Gift Nifty, early morning it closed at 19,416. Now it returned to normal 70 points premium to the spot market. Thus, it's kind of indicating around 50 points gap down opening. So that's about the global market. Let's see the India specific info. First, about Reliance. Yesterday, they issued the largest bond issue by a non-financial Indian firm and it's fully subscribed for all the asked 20,000 crore rupees. So, despite being the largest bond issue and being a private company, they only paid 40 basis points extra premium more than the government bond. In the history, this is the second lowest. Only SBI a year ago paid 35 basis points premium with respect to government bond. Here, we know SBI is no different than Indian government. All others, HDFC Bank, ICICI Bank, all paid at least over 50 basis point extra compared to government bond. And even when it started to trade in the secondary market, it started with a premium of 100 rupees. All these shows the confidence of investors in Reliance Industries. So today we can expect market to react for this. Second, another positive news. As per Association of Mutual Funds in India, for October month, Indian mutual funds monthly money into the equity market reached near 20,000 crore rupees. If required, please pause and have a look at the graph. This is monthly net in or outflow of money from mutual fund into the Indian share market. There is another interesting graph. Every month, total SIP contribution hit the new high 17,000 crore rupees. I mean, before 2021, it was always constant 8,000 crore rupees. Now, it's like keeps on increasing. Please look at the slope. It's not stopping. So, eventually, all this money is going to end up in Indian stock market, no other ways. So, long term, it kind of affirms Indian market must be positive. Anyway, moving on. Then, as per stock open interest, TCS, Infosys, Tech Mahindra, simply we can say most of the IT stocks, Ashok Leyland, Ipca Lab, HUL and Tata Power got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Ramco Cement, Power Grid Corp, Power Finance, Tata Chemicals, Apollo Hospital and NTPC got an increase in open interest with a positive price close, indicating long build-up. About institutional activities, only in the last pre-market video I said in the last 4 days, I mean between last Friday to Wednesday, FII reduced the selling as the net sold value was under 500 crore rupees. But yesterday, they again increased the selling. The net sold for 1,700 crore rupees. In response to that, DII net bought for around 1,500 crore rupees. As a summary, US market near crashed. Even yesterday morning, the global momentum was not that great. And during the Fed chairman press conference, he kind of reversed it. So at present, the global momentum turned proper negative. In case of Indian ADR, IT stocks crashed. However, despite all this negativity, GIFT Nifty indicating only 50 points gap down opening, and also in Indian market, yesterday Reliance closed over 1% negative, but in GDR it closed near 0.5% positive. So let's hope at least Reliance supports the market today. Then about the things to look out. Today, ONGC, M&M, Coal India, Hindalco, Aker Motors, LIC, HAL, SAIL and Sun TV Network are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, around 12:30 p.m. UK's GDP data and manufacturing production growth is due, and at 1:30 p.m. Chinese loan-related macro. Then in the aftermarket hours, India's manufacturing output and industrial production is scheduled to release. In US, Michigan consumer sentiment are some of the items we need to keep an eye out today. Coming to technical, yesterday, reflecting the mixed global sentiments, Indian market kind of mirrored it. Nifty opened mildly positive, traded in the range 19,460 to 19,380 and finally settled 48 points down compared to Wednesday's close. Thus, in the daily chart, it formed a bearish candlestick pattern. That's the first negative. Second, for consecutive third straight session, Nifty failed to pass above 19,450. Third, Nifty slipped below 21-day exponential moving average as well as the 5-day exponential moving average. All these three kind of indicating failed bullish reversal. So as long as Nifty is below 19,500, the sentiment now favors bearish bet, and I expect all rallies till 19,500 are likely to be sold into. On the lower end, support is placed at 19,300, below which a serious correction might happen. Then in case of Bank Nifty, in the first hours it opened and traded negative, then quickly it recovers and reached the positive of 0.5%, but from there it lost nearly 200 points and closed just 25 points higher. Thus, in the daily chart, it formed a small bullish candlestick with long upper shadow, kind of indicating selling pressure at higher side, and also similar to Nifty, it failed to breach the resistance level 44,000. However, unlike Nifty, it took support at 21-day exponential moving average and 5-day exponential moving average around 43,500. Going forward, the trend is likely to remain sideways to positive as long as it sustains above 43,500. So, a fall below 43,500 might signal a failure of the current trend. Thus, below 43,500, Bank Nifty might fall towards 43,000 to 42,800. On the options front, the maximum call option open interest was at 19,400 strike, followed by 19,500 and 90,600, with the highest new call rating at 90,400 and then 90,500. On the other side, the maximum put option open interest was at 19,400 strike, followed by 90,300 and 90,200, with a new maximum put rating at 90,400 strike, then 90,200 strike. So this options data also indicating that 19,400 is likely to be crucial for direction on the either side. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.